Good morning, trade pros. Welcome to the morning market update for Tuesday, October the 2nd of 2018. This is George Papazov, Trade Pro Academy, here with the good folks at folks. Can't talk today. With the good peeps here in the office. Marky's over there and Victorio's here. We got a great update for you guys this morning. We're going to talk about oil. That's what we're going to focus on. And actually, that's it. It's going to be a shorter morning market update today. There's kind of a lack of news and volatility. It's going to pick up starting tomorrow, but the key asset to trade today is going to be oil, and I'll tell you guys why. All right, let's take a little tour around the world. In Asia, Japan's down 0.1%. Hong Kong's back today after being closed yesterday, down 2.4 percentage points. China is still closed. The India markets are closed today as well. So we're seeing a sell-off overall in the Asian market session. In Europe at midday, that sell-off spilled over into the session as well, but to a lower extent. London's down 0.5%. Paris is down 1 percentage point. Frankfurt's down 0.8%. So actually, selling intensified through the European session, and we're giving back some of the gains over the last couple weeks. And when you look at this morning market update, you might say, well, it looks like a bearish day. And here's the thing, we're still in the bull market. We have to understand the location, because trading is like real estate. The location is the most important aspect. And where are we right now? We're just on a huge rally on a short pullback. All right, that's what we have to understand. Can we start to see a larger term sell-off and enter into a bear market at some point? Yes, but I'm looking at that for 2019 Q1. That's where we're starting to see some more opportunities for the downside to really open up. All right, in the United States, Dow's down 0.4%, S&P's down 0.3%, and Victorio's down 0.5%. Well, I just called NASDAQ Victorio. Victorio trades NASDAQ a lot, so we're going to start calling it Victorio. So Victorio's leading the way down. Again, just kidding. NASDAQ's leading the way down 0.5 percentage point, and markets are red across U.S. as well. All right, today's 10-year yield's down 2 basis points, still above 3%, 3.06 currently for the 10-year yield. And we're seeing that, you know, despite the fact that everyone called for a sell-off in equities and we're trading above 3% yield, that hasn't happened yet. Remember, though, this is a medium-term to longer-term thing. Doesn't necessarily mean it's going to happen the same day that it exceeds 3%. Although it did. The first day that we exceeded 3%, market was very bearish, and then it corrected and went back up. All right, today we have a not-so-busy economic calendar. We have a testimony from Randall Quarles on implementation of the Economic Growth, Regulatory Relief, and Consumer Protection Act. Holy crap, who names these things? That's TIEGRRCPA. All right, well, anyways, 12 p.m. we have Jerome Powell's speech as well. He's coming on the wire today to speak, and that's after a Fed rate hike. I turned my back on you for 1 second. It's not metaphoric. I still got your guys' back. Actually, you got mine now. I just want to see what other news we got. We got total vehicle sales being reported throughout the day. So you're going to see vehicle manufacturers come out and update us on their latest sales figures. That's going to be important for motor company stocks, Ford, GMC, etc. And we have a bank holiday in China. So that's it. That's all we got for the economic news. Not an intense amount of news, but there's still enough to generate enough volatility for us to make our profit goals for the day. All right. Oil prices. Let's talk about oil because this is important. Oil hit a 4-year high, and there's new talk about an old document. Get this. Have you guys heard of NOPEC? Have you heard of NOPEC, Vicky? Mark, NOPEC? It's a proposal to allow the United States to sue OPEC nations for price fixing mechanisms through the OPEC channel. And that's been a proposal that's been shelved a lot of times. If you guys don't know, the United States is really good friends with Saudi Arabia. All right, together they funded and started the idea of a petrodollar, which means that every barrel of oil that's exchanged globally is done in US dollars. That has kept the United States afloat during this growth of the last few decades. All right, that economic cycle's grown on oil, and they've capitalized because they've been the reserve currency, and it's for that reason, because they're the petrodollar. That's the main reason the United States is a reserve currency. You guys have to know that, right? It's because it backs oil. Now, here's the thing: the the Congress actually started this bill that didn't really pass before. It's kind of an idea, and it's resurfacing now because OPEC is manipulating the price. That's what they're saying. Saudi Arabia said we want $75 oil per barrel. All right, that was their most recent squawk. Before they said 80 bucks, and a lot of OPEC nations are saying we want it anywhere between 75 to 80. What are we trading at right now on oil, Marky? 74. 75.44. There you go. They got it. They got what they wanted. And you're saying, well, that's the market. It's a free market. It's a free market until you realize the supply side is controlled by these OPEC countries, and even non-OPEC countries come together to kind of set this price and maintain supply. They don't set the price, but they set the supply, and the supply controls the price. All right. Given that demand is stable, if you bump supply up, the price goes down. If you cut supply and agree to not produce above a certain level and you stick to that agreement, price is going to go up. And that's what's happened on oil. All right. So it's coming back into the view, back in the lens, this NOPEC agreement, and basically No Oil Producing and Exporting Cartels Act is what it's called, or NOPEC. And member states of OPEC will be sued for price fixing and for manipulation in the market. Is that going to happen? I strongly doubt it. But you got to understand the reason behind why they want to do that. Higher oil prices are putting economic pressure, not just on the stock market, but the economy overall. All right. Higher oil prices is not good for the economy. It raises your input costs. So you have fuel to transport goods, plastics and raw materials are created out of oil. You also have gasoline that goes up for workers to get to work to produce those goods. And all in all, it raises inflation and it raises costs. All right. That's the downside of oil. Now, for us as traders, it's been a great couple weeks. Yesterday, we had some no-brainer trades on oil. You know, we caught the bottom end of $1.40, I think, $1.30 move. Phenomenal day. That's oil. All right. Today, watch out for that oil price. I think we've hit a 4-year high, and we're going to start to see some selling here. It's tough to go against the trend. It's tough to be bearish on oil right now. You had to be long and making money already. And at the same time, we're getting a little bit overstretched. I think we're overdue for a little bit of a pullback in oil prices. So early on, we're going to try to see if we can sell rallies. And if that doesn't work and we take out the high, you got to buy the dip and run with it because there's going to be a huge upside if we take out the previous swing high. That's oil. Next, the U.S. federal debt increased by $1.27 trillion in fiscal 2018. The fiscal year runs October 1st to the end of September. All right, so you guys have to know that it's Q3 to Q3. It's not a Q4 type of thing. It's not a calendar quarter. It's a fiscal quarter. And the fiscal year ended as of last Friday. All right. Actually, as of Monday, technically, it's October 1st. Sunday, because it was the last day of September officially. And they added $1.27 trillion of debt. Get this. All right. Currently, this was the 6th largest fiscal year debt-wise in the U.S. history. And the national debt now totals, get this, $21.51 trillion on a national debt level. That's huge. And we told you guys when the interest rates went up, the issue with interest rates going higher is it makes the debt payments for the government much more expensive. All right. In order for them to already service the debt that they've gotten, all right, they raise money. Countries like China, Saudi Arabia, sovereign countries buy their debt, gives them money, and expects a payment of interest on the way out. Now, the U.S. government's likely taken that money and already spent it, and now for their past expenses, their carrying costs get higher. You have to understand that. So who's the interest rate most cumbersome for? It's the government itself. And that's why Donald Trump ain't happy about it, right? Said, I wish they wouldn't have raised rates. Anywho, today's morning market update, I'll tell you this. Markets have run up quite a bit to end last quarter, and I think we're going to start turning to the downside here on oil, on equities, on just about everything. It's time to take out some sell stops. Too many traders are too long, too high up, which means sell stops are coming out. Very contrarian view, considering it's a huge bullish market. But there it is on October 2nd. I'm telling you, market's going to turn a little bit here. Do with that info as you please. You guys have yourself a great day. Thanks for tuning in. I got to turn around, open up the trading room. I hope you enjoyed today's morning market update. We'll see you tomorrow morning at 9 a.m. And you guys should head on over to the site and sign up and have a 14-day money back guarantee. See how we trade this thing. There's going to be a lot of opportunities coming up in the next quarter, and I want you to be on board for that. All right. Imagine what it would be like to finally start trading profitably and seeing the light. That's what we do at TradePro. Our whole community is based on that. Not just me, everyone on my team and everybody in the community as well is there to help you out. So we'll see you guys in there. Let me turn around and open up Trade Room. You have a great day. See you tomorrow. Hope you enjoyed this burgundy report. Burgundy shirt, burgundy socks. I don't know what got into me this morning. We need to hire somebody to dress me. We need a TradePro stylist. All right, guys, let's talk about a few levels where a long trade here would make sense and where a short trade would make sense. We're seeing a little bit of rebound here in equities. We're still below the previous day's closing price. And I think there's a few levels here that could serve as a high probability, low risk trade opportunity, both on oil and on equities. Thanks, Marky. And with that, I got to find YouTube so I could end the broadcast. All right, guys, take care. Have a great day.